Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Dan Collins of the China Money Report in Shanghai. Dan, welcome back.
Hey, Max. Thanks. Good to be back.
All right, Dan, you're one of our favorite guests because your call on Asia and China has been spot on for a number of years. So once again, we call on your expertise to help us get through the latest news. It looks like trade war is on. Last year on Keiser Report, you said that the trade war has been on for a long time. It was only the U.S. who didn't know it. I think now they know it. Your thoughts, Dan?
Yeah, absolutely, Max. I think I said last year that the trade war has been lost for many years, and I think that's been borne out by the facts. U.S. workers haven't seen a paycheck increase in 2 decades. Most of the manufacturing areas of the country, needed a lot of work. 40, 50,000 factories were lost, in the last decade. We have less workers in manufacturing in the United States since we've had it in the 1970s. And that's not all automation. There's actually more manufacturing workers today than there's ever been. They're just not in the United States, because the United States was the only country that didn't protect its workers. U.S. had a 2.5% duty against everybody else, and people like China here has a 25 to 50% duty. I know this because I've spent 20 years here closing factories in the United States and opening them in China. So unfortunately, that's been the situation. Now, trade war, I think it was lost. I call this the Trump reconstruction economy. If you look at these tariffs, $50 billion, 34 has already been set. Additional $16 billion are coming. I took a look at the tariffs in detail. They're all centered around reconstructing and reindustrializing the United States. A lot of, motors, industrial lubricants, furnaces for steel manufacturing. I mean, it's mostly based around manufacturing, not a lot of stuff that'll hit Americans in the retail pocketbook. So the trade war is just starting. Over here, they call it the Maoijan. Gets a lot of press. I've had a couple deals postponed already because of it. I think we're at the first inning of this. I think it could continue to get uglier and uglier. China's going to run out of ammo before the United States. China only buys about $130 billion a year from the U.S. U.S. buys $500 billion. So in that way, the U.S. does have a lot of cards in their pocket to play in this trade war.
Right. So a lot to unpack there, Dan. But first of all, just to summarize, you are saying that Trump merely recognized the facts on the ground, that there has been a trade war. America lost a trade war. And he's simply now getting back into the game. So I think that needs to be recognized. Number two, you said something there very interesting. I want to get your further comments on it, that China would run out of gas before the U.S. in this trade war. And can you go into that a little bit?
Sure. As I mentioned, they've only buy about a fifth of what the United States buys from them. So in terms of just constantly packing on tariffs, it doesn't work. This whole deindustrialization concept of the United States, which we've been talking about here for several years, is borne out by the fact of what China has targeted on tariffs to the United States. Soybeans, fish, nuts. The U.S. has become a 19th century agrarian economy, and we have very little to export anymore. So it needs to be reindustrialized. China has other ways, though, they could go at the trade war and just as opposed to tariffs.
Right. Now, just on the big macro picture, okay, America needs to be reindustrialized, and so factories come back to America, and it may be cheaper to build a factory now in America than in China, okay? So that means that wages potentially in America go up, but it also means that prices go up. You're going to get inflation. So the American worker will get more money in their pocket, but stuff will start to cost more. So it's the exact opposite of what we saw for the past 20 years. Americans were willing to accept lower wages because the stuff at Walmart that was manufactured in China was depreciating in value faster than their wages. So they had that sense of, well, my lifestyle is actually going up because I can afford a big screen TV. I can afford all these clothes made in Asia, even though I'm making less. So is it correct to say that whole equation is now going to go into reverse, Dan?
Yeah, I believe we're at an inflection point here. I mean, I've been here 20 years. This is the inflection point. The world's not going to be the same. China no longer has the cheap labor. I mean, literally, they're making 60 to 70% of what U.S. workers make now. The U.S. is the new emerging economy. All the infrastructure needs to be rebuilt. The workers actually make very low wages now, $10 an hour, $12 an hour. not much more than they get here in China. And I see big opportunities here in the U.S. now if they to reindustrialize. Inflation could come back. However, as you bring all that new capacity online in the U.S., the prices will come down. So it will start out with a tariff, but U.S. Steel adds more plants and other steel companies add more plants. The price will naturally come down. Americans will have workers, and then they'll have their own industrial base again.
All right. Well, that sounds like a big positive for the U.S. So how is this being portrayed in the media in China? How are they talking about this over there?
Well, the number one issue here now, Max, is the people throwing themselves off buildings because they lost money in the World Cup. Thanks a lot, Germany. But number two is the Maoyi-Jian, the trade war. And people are a little bit nervous. 20-30% of the exports out of China go to the United States. However, if you look at plant by plant, company by company, a lot of companies have 100% of their exports go to the United States, and that's all they do. These guys could be in severe trouble. They could be out of business the day after next. You could have a lot of economic dislocation. You could have a lot, China, now's the time to confront China because you have a lot of debt overhang. You have this One Belt, One Road. You have all this money going all over the place.